All right, great. All right, so we'll start with the PowerPoint training that we've done just to make sure everyone is up to date in a quick manner on how we can do this. And I'll try to get into, even though my internet's a little slow today, I'll try to get into two sites so you can see how you'll start using it immediately today. It is up and running, so we'll get an email to everyone stating that and where they need to look for that. But the Quantum Wealth Builder, we've been working on for quite a while. John Phillips and Randy originally had helped, and then John Phillips has taken it at the end now to really take what I created as far as financial planning software and make it easy and powerful for us all to use. So when you get into your homepage, you're going to see something like this, and we'll go and we'll look at it. But it's really going to then show our logo, which is the 4 puzzle pieces, and we call it putting the pieces of your financial puzzle together, the dimer, the pad, the MRA, and the RSC, which we will cover. When you go into your sheet, you won't have a bunch of different people on here. This would be then if you already entered 5 different people, Dan, Bob, husband, Stan, and Joe. And you'll be able to create new prospects, select existing individuals there, and it'll show what you've completed, if anything. So for Dan, you have all 4 green check marks. For Bob, you've completed the dimer and the retirement. For husband, you hadn't completed anything. You just entered the basic data. So it shows exactly what you need to do. Let's say it's a new person. Click the Create New Prospect button, and you'll go into this section. And this section then will allow you to fill out just the basic data, name, email, phone numbers, an address for an individual. Click Submit, and you then create a client or prospect homepage. And the homepage is important because it tells you which of the 4 tests are completed. So the dimer, the PAD, the MRA, and the RSC. And if you forget what each one of these is, we've explained each specific test underneath. The dimer, death, income, mortgages, education, retirement. Calculate the correct amount of life insurance, death benefit, and individual needs, and so on. And you'll just click each one of those, and you can go to any of the areas at any time. So you don't have to go in order. You don't have to do them all. You have a little bit of flexibility and freedom to do what's going to fit you and the individual you're working with or the family you're working with. So let's say now you pick the dimer. Well, the dimer is going to look like this. This is the entire input for 1 page of the dimer. So it's very simple. I'm going to blow it up so it'll look like it's on 2 pages. There'll be data for the man, and there'll be data for the women. So you can do 2 of the dimers on 1 page. Makes it very, very easy. I know Tony Reyes really wanted this part done. Well, it's there, and he's going to be able to use it. I think Quinn and Nancy also like the double dimer. Well, here's the top half. So the first thing someone's going to enter would be then, in this case, they'll have the death benefit for Dave and the current annual premium for Dave, Nancy death benefit, annual premium, consumer debt. When you enter the consumer debt in Dave's column, it'll automatically go over to Nancy's column as well because it needs to be paid off no matter who passes away. Current income, Dave makes $50,000, Nancy makes $60,000. They both want to provide that income to each other for 20 years, so we're going to have to have a little bit more for Nancy because she makes a little bit more. Mortgage, $350,000, and that means that if either of them pass away, the mortgage will be paid off for the other one. Education, $100,000 per kid. They have 2 kids, so for both sides, we'd have that available. And for Nancy, they want to provide $200,000 of extra funds for retirement. Not how much she totally needs, but just how much extra he wants to provide in case he passes away early. Nancy, because she makes more money, needs to provide Dave about $300,000 of extra lump sum funds because she would have been putting more money into her retirement. If that's all you enter and that's all you have to enter, you click the button and this will come up. And we're going to now see very clearly that we have a very simple dimer completed. It's going to tell us that the debts, the income that needs to be replaced. So we need to have $35,000 that consumer debts paid off, $1 million of income to replace Dave's income, $1.2 million to replace Nancy's income, $350,000 to pay off the mortgage, $200,000 for education for the kids. Dave needs $200,000 extra life insurance on him to pay for Nancy's retirement. Nancy needs $300,000 life insurance on her to help pay for Dave's retirement. So that then comes up to $1.785 million Dave, $2,085,000 Nancy. So again, very, very simple. When you go over here now to the dimer, that's going to be checked off. You've completed that. You can go back in and modify. Nothing's stuck, nothing's static. You have that flexibility to go and make changes as needed. Then let's say we're going to go into the PAD. PAD is going to give us a net worth, and the net worth will be calculated based on assets and liabilities. So you enter the assets, you enter the liabilities, and then that will give us our net worth. So in this case, if we entered in assets of a Bank of America CD of $100,000, a home value $500,000, we enter in debts, Bank of America mortgage of $350,000, a car loan of $32,000. It gives us a net worth of $218,000, and you can enter as many debts and assets as you like here to come up with what the true net worth is for an individual. Now you'll have the second box checked, pad. MRA, monthly resource available. We need to get that changed, right? If you can, on every single page, make sure John changes MRA, monthly resource analysis, available. Click that button, and now we're going to be able to add in all kinds of income, even miscellaneous income. So the top's going to be what's your current income, whether it's net monthly salary for Dave, net monthly salary for Nancy. Maybe one or both of them have business income. Maybe they have miscellaneous income, rental income, or trust income. That's whatever they want. You also then can put in a modified. And the modified column there is to give you freedom and flexibility to plan. Because let's say Dave makes $3,000 a month right now, but he's going to get a raise. He's going to make $3,500 a month. That allows us to put $3,500 in the modified and gives us more money to plan with in the future that they're not used to spending yet. So very important. Also, maybe they're going to take a cut in pay. We need to be able to show really what's going to happen in their lives so they can feel it. Once they can see it and feel it, then they will take action. Second part of the income goes to the green line. Again, more miscellaneous income types. So we gave you some flexibility. Added income could be QS2 income, could be anything that they're getting that's not current, and then you can put it over there into the modified column. And then down below in the second half, it has monthly expenses. Your monthly rent or mortgage payment. Maybe you're paying $2,500 now, but you're refinancing, and the modified payment might be $2,000. Well, that gives us $500 extra to use for our planning. Credit card payments. Maybe you have $400 of credit cards you're going to pay off, so you don't have that monthly payment. Maybe your car loan is going to be paid off. You have a $500 payment now, but there's going to be a zero payment next month. Any type of other debt payments, you can list it. And then we have expenses like food, car maintenance, utilities, phone, etc. And we have other expenses like life insurance. Maybe that's going to go down or go up. Maybe medical insurance is going to go down. Maybe we can save money on the PC, and there's a miscellaneous expense column you can enter also. After you enter in all the data, you then would click submit, and this is what the input sheet would look like if you filled it out. And that's what it looks like. So it shows net income of about $700. Well, if someone has a net loss of minus $700, it means they don't have enough money. They're bringing in $7,000, they're spending $7,700, so they need to make more money. Great opportunity for you to talk about your opportunity here with QS2 being part of your team and how you can help them erase this negative and give them a positive. So great way to use this for two things. One, for recruiting, as well as to determine how much money is available for supplemental retirement planning, for family protection, anything that you need to help the family with. Now the third box is checked out. The fourth box, very important, that's our retirement success evaluator. Very, very powerful. Click the box, you're going to come over to this, and you're going to enter in Dave and Nancy, their current age and the age they want to retire. You're going to enter in how much money they want in today's dollars for retirement and an inflation rate. You're going to enter in 4 different asset classes or categories. Maybe they have 2 401ks. Well, you might just list them both together. Maybe they have 6 IRAs. You can list them together. Maybe they have a bank account, a stock account, etc. I want 4 assets there because there's 4 colors that we use when we get to the graph, which will show you. Show their current value. If they're putting any annual deposits in, the growth rate they think they'll get before retirement, and the retirement rate they think they'll get after they retire. Very simple data. Then we have our miscellaneous retirement income. Account name would be retirement income names such as Social Security Bob or Nancy, Social Security Dave, Social Security pension income Nancy, rental income, anything that's miscellaneous they can put there. Part-time income, supplemental retirement income. Put in the monthly income amount. Is there an annual increase guaranteed? Then you have flexibility to put in whatever start year you want. The first year you can start income is the year they retire, but you can start it any year after that. So you don't have to start a certain income flow right when they retire. They might retire at 60, not take Social Security until 67, so you'd put down they retire at 60, but they're not going to take Social Security for 7 years later. So it gives you that flexibility. Same thing, end year, you have flexibility. This will let you show anything as far as a plan. End year typically is going to say no end date, meaning the income's going to go for as long as they live. But if it's going to end before they pass away or at a certain age, we put that in there. So you might have income go for 2 years, 5 years, 10 years, 15 years, it's whatever you want. Then you click submit. So let's look at what the entry would look like. Let's say Dave and Nancy, both 45, want to retire at 65. Let's say they want $7,500 of income in today's dollars indexed at 3%. Let's say they have multiple IRAs that equal $150,000. They're not putting any money into the IRAs. They think they're going to get 5% before they retire and 4% after they retire on their IRAs. Let's say they have miscellaneous stocks worth $75,000, no deposits annually. They think they'll get a 6% before and after retirement rate. let's say they have $125,000 of 5 different CDs. They're not adding any more money to the CDs, but they're getting 1% rate now. They think they'll continue to get 1%. And let's say they both have 401ks. They add up to $150,000. They're putting in a $15,000 annual deposits between them. They think they'll get a 4% rate on those assets before retirement and after retirement. Second half of this page for the RSE input will show Dave, Social Security, $1,200. Nancy, Social Security, $1,200. Pension for Nancy, $2,000. No increases in this example. Retire years when they're going to start getting Social Security, and pension, and the income's not going to end. That's why we put no end date. All you do is hit Submit RSE, and you're now going to tell them, this is the summary. Today's 2013, they're going to retire in 2033. No, the retirement goals were not achieved. Their initial their income in today's dollars is $7,500 at 3% inflation. They need $13,546 that first year per month in 2033, just so it's worth $7,500. So it's done right there. It just tells them simply, no, it's not going to work. We then go to the second half of this page, and we'll look at a graph. And the graph's going to show the green line is what they need. That's starting at the $13,952 and increasing each year. The blue bars, that's the income they're going to have. And if the blue bars don't touch the green line, green dotted line, it means they're not having enough money, which we call a retirement income deficit. So it's very easy for anyone to look at this and know, okay, that's not a good thing. We then can show them to prove why we're saying they're going to have a retirement income deficit. You go to the page that shows their monthly retirement income cash flow. It's going to show the year 2033 on, their age when they retire, 65, both in this case. Miscellaneous income 1 and 2, that was both their Social Securities, $1,200 each. Miscellaneous income 3 and 4, that was Nancy's $2,000 pension. They have no other miscellaneous income. Then it's going to show how much money per month they're going to take out of their IRA until the IRA is used up. How much money per month they're going to take out of their stocks until that's used up. Their CDs until that's used up, and then their 401k until that's used up. Next column is their total gross monthly income to receive. As long as that column equals the next column, which is the monthly income adjusted for inflation that they need, then there's no deficit. But as soon as the income to receive is lower than the income they need, you have a monthly income deficit, which you can see over there to the right-hand side in red. So by the time they're 80, they have a $16,704, not annual monthly income deficit, but a monthly income deficit because they've used up all their assets and they're simply living on their Social Security and their pension at that point. We can then show them each category, explain what that means. Then we're going to show them a graph of their asset usage. And in this case, it's going to show their assets are used up in the year 2047. In fact, below it's going to show IRAs are used up by the year 2036, stocks are used up by the year 2039, CDs are used up by 2040, and then the 401k is used up by 2047. So we got to make sure that we point those little tidbits out. We can then show them this is their IRA account per month, what they're going to take out of it. That's how fast it's going to be used, and each is color-coded. So the stocks will be in the beige, the CD will be in the pinkish red, and the green is the 401k with total assets being the light purple. So you can go through and show them exactly how each account could be potentially used to provide them the income, but in this case, all the assets were used up before they turned 79. Now we're going to go back, and we're going to make some modifications because we needed to. They ran out of money. With this couple, they wanted to retire in 20 years, so I'd say, okay, you worked full-time. You're going to work full-time for the next 20 years, but your retirement plan doesn't work. So your choice is just continue to work forever or put a plan together that would allow you to retire at some point. What we're going to first look at is, let's look at you working the first 5 years part-time when you retire. So can you both imagine that you'd earn $2,500 in tomorrow's dollars, which would be about $1,200, $1,250, $1,300 in today's dollars? Could you work a part-time for the first 5 years, each of you? And they'd say yes. And that means that that would generate about $5,000 in gross dollars for them. And we'll only do that from retirement year through 2038, which is 5 years. Then I'll say, okay, Dave, we need to set up a supplemental retirement plan for you. We're going to put in $250 a month, $300 a month, whatever it is, $400, however much they can fit into their budget. And with that, if you pay in between now and 2039, you pay in for 26 years, there's a high probability we're going to be able to get you $5,000 of monthly income, and that's going to be tax-free from the year 2039 all the way till the time you pass away. And he says, great. We're going to say we're going to do the same thing for Nancy. We want to increase your supplemental retirement income by $5,000. You're going to put money in right now into a supplemental retirement plan funded into Index Universal Life. You'll have that same $5,000 a month income starting in 2039 and continue on. Just by making those modifications, we can now tell them, yes, your plan's going to work. So now instead of a red no, it's a green yes. And now we show that there's no retirement income deficit. The green bar or the green line always intersects our blue bars, and that means no, in this projection, we have not ran out of money. We then show them no monthly retirement income deficit, and that's how the money flows. Show them how their assets lasted. The assets did not run out prior to 2062. Then it shows how the assets would be used up. IRA, stocks, CDs, and 401ks in this example, but they last all the way out till 2062. We could then show them, again, maybe we look at the 401k, the green colors, when they're going to take money out of that, how much is in the 401k, and then the total asset balances in the purple to the right. You'll also be able to show them each asset distribution itself, the account and asset value. So this shows their IRA value, beginning, annual projected earnings, monthly income, the amount you're going to take out per year, the ending balance, and how quickly that would be used up or last. Then it'll show their stocks that we're showing in this example. And again, you name these. We don't name them IRA and stocks. You name whatever these asset categories are. The CD, and then the 401k, and each one of those is printed out on a full page, so it comes out really nice. So then you've had every part of the plan done. That's what it will ultimately look like. I wanted to go through real fast just so you could see how everything works inside. Now what we're going to do is we're going to skip on over to the website. And I talked to John earlier, John Phillips, and he just put this new modification to your dashboard. You can see important information. The new Quantum Wealth Builder is a comprehensive financial management tool for your prospect. Try it out. You can click there, or you notice there's our little puzzle piece there. Click Quantum Wealth Builder, and look what comes up. That exact same screenshot that we showed earlier as far as the plan. Now this is one page, so you can see at the top has our putting the pieces of your financial puzzle together, explains what each of the four is. And down here, look, this is mine. I've already played with it. So now getting started, you won't have any people enter down here, so you can just click create a new prospect. If you have some, if you're going to do this for a current associate, all you do is select existing associate, and if you've already entered a plan, you can go and just click one of these and you go into them. So what you'll do is, let's say we create new prospect. Click the button, come over here, and let's say we're going to say this is going to be Tom, teacher. Say this guy's a teacher, and Sally, teacher. We'll say they're both teachers. We'll say that Greg and Giselle White, or maybe Sheila's working with these teachers. They like working with teachers like I did. And we'll say this is Tom at school.com. Phone number 111. Oh, we got to move over. Still got to fix that. Enter all the data in. We'll say 1 First Street. And we'll say that in LA, California, and zip 99999. So let's say that's in there. Click submit. You now will create a home page for yourself for the individual. And now it's going to say Tom teacher, Sally teacher. You can view info, edit info, whatever you want, print the reports. Let's go into Dimer. It's going to look just like we talked about. Okay. So in this case, let's say the current death benefit is $300,000. Let's say he pays $4,000 a year for that. Her current death benefit is $200,000. They pay $3,000 for that. Let's say they have $25,000 of consumer debt. Let's say he makes $45,000. They want to protect that for 15 years. She makes $60,000. Yes.
You need to make a correction up there, top right. The annual premium is $3,000. You should put $30 accidentally.
There you go. All right. Good catch. Okay. 15 years. We want to replace this for each of them. And let's say mortgage balance, $325,000, education. Let's say I have no education right now, no kids they need education for in this example. And let's say they don't want to fund any retirement for each other. So that's the simple data. Click Submit Dimer, and there you go. Your Dimer's done. We need $1,025,000 for Tom, $1.25 million for Sally, and here's the areas we're going to cover. We'll show you what the printout looks like in a second as well. It's pretty cool. So now we can go back to the prospect homepage. And that'll now show that the Dimer's checked. PAD, you'll come over to Plan Assets and Debts. And again, very simple. Click the Add New Asset for Tom Teacher. And let's say the asset name is, let's say he has a TSA of 403B at his school, and he has $200,000 in it. And let's say liquidation value is $200,000. Asset type, we'll put 403B. That's retirement. Click to retire. Asset owner. Click the button. This is going to be Tom's. Again, what's the purpose? For retirement. We won't worry about data invested like they use. Why did they like it? It's tax deferred. Why don't they like it? Recent losses, let's say, just so you have it in your file so you know what it is. Okay, then you submit asset. Once you submit the asset, it's going to show right here. And then now, let's say you added 10 other assets, which you can do that. You add new liability. Let's say now we have a car loan. And you can name it, actually, let's say B of A loan, purpose, car loan, liability type, monthly. And you can call it whatever you want, amount owed, let's say $10,000. Monthly payment, $400, minimum monthly payment, $400, interest rate, 6%. So you submit liability, and now it's going to show you their assets, their liabilities, what their net worth is. So it just gives you a very quick picture, and you can add in all the assets you want and all the liabilities you want. Prospect home, same thing when you come over. Now it'll show the, my internet is having a problem. Can you still see me, Randy?
Yeah, I still have you, Dan. You went back
All
to
right,
the
good.
home page.
Cool. All right, let's go to MRA, monthly resources available. And again, this will be Tom Teacher. Net monthly salary, let's say he makes $3,500. And let's say it's not going to be modified. Let's say Sally makes $4,000, and it's not going to be modified. Net business income, none. Let's say they want miscellaneous income. Let's say they have a rental property, and they currently make $400 a month on it, right? Just enter it in right there. Let's say they have a trust, and they make $200 a month. That's fine. You can add anything you want there. You come on down. Monthly expenses, let's say they're going to refinance their current monthly payments $1,800, and they're going to reduce their payments $1,500. Credit card payments, let's say that's $400 a month for them. Let's say car loan, $400. Other debt payments, food, let's say that's $600. Car maintenance, gas, let's say $200. Utilities, $200. We'll just make some of this stuff up. Property tax insurance, we won't do that. We'll say they're renting. Oh, no, they do have property tax. Let's see, that was included in their payment. Education, life insurance, let's say he's paying $300. Let's say she's paying $200. Medical insurance, maybe they got $600, and we're going to reduce that down to $400 to show you a modification. And then you can put miscellaneous expenses there. But let's say now that was all you did, submitted the MRA, it'll come back and it'll show, here's what they have in income. Tom Teacher, $3,500, Sally, $4,000. They have $400 of rental income, $200 of trust income, $8,100 a month. Then it's going to show currently versus modified. Currently, what their mortgage payment is $1,800, $400 a credit card, $400 car, $600 of food, $200 car, $200 utilities, $300 life, $200 life for her, $600 medical, and it shows they have $4,700 net income in this case. Then what we show, monthly expenses, $3,400 net income. Then because we have about $500 less of expenses overall, because we have $300 less mortgage, $200 less medical, they have $3,900 net income. So now you know what you have to work towards to do the planning. Very, very simple. Then we'll do the last one, which is Retirement Success Evaluator. And again, you can spend as much time as you want in here. Tom Teacher, let's say he's 50 and wants to retire at 65. Let's say that's what they both are, 50 and 65 in this example. And you can do this in front of a client, or you don't have to. You can do it and then print it out, either one. Let's say they want $6,500 in monthly income, and they want that indexed at 4% in this example. Let's say they have TSAs, and they have let's say they have $300,000 between them, and they're putting in $15,000 a year between them, and they think they'll earn 4% before retirement, 4% after. Let's say they have a little bit of IRA. Let's say between them they have, $300,000. Let's say IRAs, they got $50,000, no contributions, and they think they can get a 3% return before and 3% after retirement. Let's say they have stocks, and they have $100,000, no deposits. They think they can get 6% before retirement, 6% after. And then let's say they have CDs, okay? And let's say they have $100,000 in CDs, no deposits, 1% before retirement, 1% after. And now it's kind of fun just to be able to see that if that's all they had and they had no other pensions, which they will, just with that data against there, you could click submit and you'd get this scenario. it would say, no, their income did not meet, and that's what would happen. That's just without any pension. That's just with using their assets up. So we know that's not going to work, so let's go back to edit this RSE. All you got to do is click that button. I want to show you real quick how that works. Now let's say miscellaneous retirement income. So let's say now they're going to get state teachers retirement for Tom, and let's say that's $2,000, and let's say STRS for Sally, and that's $2,000. And let's say there's no increases in this analysis, and they're going to get it when they retire, and it lasts for as long as they live. So then let's go in and click Submit RSC again. That's all you do. Don't have to go back to any other process. Just click it. Now it's still going to say, no, their assets aren't going to last, but they last a little bit longer. The income lasts a little bit longer. So you're able to tell them that. So then you go back to edit this RSC and say, okay, well, what we need to do is we might then have to do a couple things. Maybe we look at some part-time income for you, and maybe we can get, our goal is to get $4,000 of part-time income from the time you retire. And let's go, they're going to retire in, it's in 15 years, 2018. So they'll work from 2018 or 19, and let's go through 2025. And then let's go sup retire income for Tom. And let's say our goal is to try to get him $4,500 a month. Let's say $3,500 a month. So that's a little bit longer. And we'll go sup retire income for Sally. And let's say we want the same $3,500, and we're going to fund IUL plans for him. And let's say that's not going to start payment until 2026, and it'll go for as long as they live, because that's when they're going to end their, that's when they will end their part-time work. So let's say that's all we did as a plan, and I have no idea how this will work out, but we're going to try it, see what happens. So there you go. So just by doing those changes, you can see how close we are to providing them a successfully projected retirement. So we're close. We just have to go back in and do some modifications, but at least then you can show that for those years everything's going to work out until down here, how their assets lasted quite a while, till 2053, and then you can show all the sheets. And literally that's all you do to do the planning. Probably take another 10 minutes and you can get the plan to work where the blue bars are going to hit the green. I'll show you a quick one that I would do. I'd say, okay, we're not going to make it in this case, but let's do this. Let's say now we want a successful retirement. Maybe we don't take $6,500 of income. Maybe we take $6,000 of income. We reduce your gross income by $500, which reduces your net income by $300. So you only have $300 less to spend per month in this example. And that would then almost takes care of it. See how little things can modify this. I'm going to ask Randy. Randy, anything else I should show before we bring on someone who's on the phone?
I think that's good, Dan. I had one question pop in a second ago where I think you started to allude to it, how they would plug in an IUL if in this situation. I think you started talking about that.
Yeah. What you do is you basically have to do it separate. This won't calculate the IUL, and we don't want it to. So you'll go do your plan. So in this case, the IUL, I'm going to call it Supplemental Retirement Income Tom, Supplemental Retirement Income Sally. And in this case, I'm going to show that they needed to work part-time, because most people are going to have to do something beyond what they thought they were going to retire. So just knowing planning, I did it. I'm showing retirement income. They're going to work part-time for a few years after they retire. Then we're going to fund their IULs through the year 2025, and then we'll start taking income out from 2026 on. And in fact, with that, let's see, is that how this one works? Yeah. No, we're 2013, so they're going to retire to, what are they going to, what's 15 years, 2028? Actually, this one, we can make it look good, because actually then this income would go through 2033, 2020, 2033, and then this one would start 2033. Okay, so sorry, I fixed it. Had my math off, guys and gals, sorry. So now this will show that they're going to start taking out $3,500 from his IUL from year 2033, no end date, so that gives us 20 years to fund this thing. And we're going to take $3,500 out from hers from 2033, no end date, and again, gives us 20 years to fund it. If we show this now, there we are. So pretty close as far as what our goals were. And we just go through it and we modify and fix it. Anybody on, Randy, you want to bring on?
I was just looking at the chat window to see if we had any good questions. We might give people a minute or two to type in some questions, because it might be hard to pull people on. But I know, Dan, as I was looking at this, for me, just thinking about my situation and what I would want to do for my family, I just love how it separates everything out and really it's so comprehensive that it factors everything in. I did have a question here from one of our associates that did ask, how do we run this when it comes to how we do things here at QS2? Do I run it for myself, or does my sponsor do it for me?
Well, ultimately, you can run it for yourself to play around with it, because I think it's a great tool, and it kind of lets us learn at our own speed. It teaches financial literacy, so you should be playing with it. That's what it's there for. In fact, Nancy Versosa and I talked, and she thought, during this holiday season, Christmas time is a great time to run it for yourself, run it for family members, start getting them interested, excited about what you do. Can you imagine? Let's say you told them you had financial services, and they're like, what? You don't even understand finances. You've been scared of finances. And you show them what you can do on this thing, they'll be freaked out. They won't even believe that you're able to do these things for them. So you definitely want to practice on this, because you have to get this system down where it becomes just like I can do it. It's just like your hand. You don't even have to think about it. And what I find is very few people take the systems that we're providing to that level. And if you do, you will be an all-star, because this tool is an all-star, but it was created so you can be an all-star. Because without someone using it, it's just going to sit there and it's going to be a wasted piece of technology. So use it as much as you possibly can. Definitely you should sit down. You should make, this is another reason why I want to force myself as the recruit to go to my upline and say, hey, let's go through this, because I want to make sure I go through my dimer. I want to make sure I buy my insurance. I want to make sure I get my retirement done. I want to make sure I buy my annuities or land banking or whatever it is I need, because we got to buy the products from our upline, but then all your downline has to buy the products from you as well. So it's a good situation, good business model. But yeah, practice with it. I think what I would do if I was an associate and a leader, I'd sit down with every one of my directs, and I'd go through this. Even if the associate has already gone through by himself or herself, I'd sit down and let's start practicing our business model, which is leader taking the associate through the system, the software, the dimer, the retirement, and really start showing that that's what we believe, that's what we understand, forming the relationships, and then that associate does the same thing to his or her direct associates. And then those associates do the same thing to their direct associates. And guess what? By the time we're done, we'll have all 8,500 people through retirement planning and knowing exactly where they stand with their debts, their assets, their monthly resources available, their dimer, everything. It'll be a great situation when this becomes part of our culture. Because remember, we've been talking about culture a lot the last 2 months. Well, we talk about culture, internal consumption, field training, recruit, make sure to put those people through the system. We're responsible for their success. But another part of our culture is quantum wealth builder. Another part of our culture is financial literacy training. Another part of our culture is building the confidence in every single person we bring on to this company so they can be successful helping other people. So hopefully that wasn't too long-winded, but you can tell I'm a little passionate about it, Randy.
Oh, absolutely. Good job, Dan. That's outstanding. And another question we have here was, does this show to age 100? How is life expectancy determined? So is it through age 100 here?
It will go through whatever, I think 30 years it goes through, because past that it's going to be guessing anyway, because this is just going to be an estimation. So I think it goes from like age 65 to 95. If they're 60, to go through 90. And remember, the key is going to be, even if this only goes from 60 to 90 right now, let's say in this case 65 to 95, Randy, then what will happen is next year when they're 66, you're going to run it again for them. When they're 67, you're going to run it again as if it's a whole new plan, because once you run this plan, next year, you need to redo it, because all the assets have changed value. They're different ages. Whatever we predicted isn't going to happen over the next year. So it's a good reason for you to want to and have to get in front of each person to develop that relationship, whether it's a team member or a consumer, and you just keep modifying, keep modifying, keep modifying. We don't have anything associated with life expectancy or minimum distributions in this calculation. That's going to be a little too complicated for the average person we're recruiting. We will develop other tools. But right now, it is what it is. It's simple. I took out about 90% of the input of my previous software that I wrote. This comes out of the previous software, and that was the most difficult thing. How do you get rid of 90% of the input and still come up with something like we have here in Quantum Wealth Builder? I can't believe I got rid of 90% of the input. That's why it was only going to take about 15 minutes to get this done.
Yeah, and outstanding, because I mean, really, just thinking if I was the client, I would want this redone for me almost every year. I'd want to see it again. How am I doing, and so on. So that's excellent. Dan, a couple other things are real more functional things with the software. One is, can we download this to our laptop, or do we have to be connected online? And I know right now they have to be connected online, but
it's always going. It's never going to be. It's never going to be laptop. It's always going to be online, because the problem with the laptop is then when modifications, changes are made, someone's might be out of date. This will always be an online system. So get a laptop, get a wireless card, run it. You can run it on your, go to your Apple and then go to your QS2 website, and you'll be able to do it.
Right. Excellent. And then one other question: with the current financial needs analysis that have been entered into the system, can we pull those into this system, or do they have to start with new ones? So
you're going to have Randy can ask John. I'm assuming we have to re-enter it because they're different, completely different systems. But we'll have to ask John.
Yeah, exactly. That's what I thought I'd do. We can update people later on that.
Hey,
that's it
hold
as far as
okay, then I'm going to go into real quick, and then we can bring some people on. I just clicked the print button. So you go print report right from the prospect home. Again, we made it so easy. It is the easiest thing I've ever seen when it comes to software. I've been in it 32 years. This is the easiest thing ever. Print report, and it's going to, I asked John to automatically click that you're going to print all of them. But if you haven't done them, then you just click the ones you did. Maybe you only did the dimer, and maybe you did the time one. You click those. If you did them all, click them all. You can print them. Maybe you only want to do the dimer right now because this is a brand new recruit. You're doing the dimer internal consumption those first 3 days, like we said. Maybe it's someone who you're just doing a retirement plan for. You click that. You submit it, and then we're going to come up with a report. I haven't even clicked this, so this is trying. So there you go. So if you have this would just be the retirement success evaluator. You can print out just that one section. I mean, this is so cool that you have that flexibility, and here it is. It's right there on the screen. Look at that. Johnny did a good job. Look at that. It's just beautiful. That is just beautiful. It's first time I checked it. So I have faith in John Phillips. Otherwise, I wouldn't have done that. Let's say now, if you click them all, now it's going to be a little different. Now you click them all. When you click them all, now you get an awesome report. I mean, I spent a lot of time writing this. John did a lot of time inputting it. But now, you can imagine, I think it's going to be like a 47 or something report. Now it's going to be the full quantum wealth builder. See all the nice, pretty colors out there? Boom, putting the pieces of your financial puzzle together. You come down, there's your table of contents. Now it's going to have everything, the whole plan. We wrote an introduction to quantum wealth builder, so you don't have to remember it. You can just read it to the client, to the individual. I'd also print one of these out, and I'd show it to every single person I'm trying to recruit. I'd show it to every single person I'm trying to sell a product, because guess what? No one else has this. Then it goes to the dimer analysis, the PAD analysis, MRA, and RSC. You go through the introduction. This is the introduction to the quantum wealth builder. Very simple, but to the point. There's the end of it. Then you go into the first step, the dimer. There's the dimer. It has the focus of analysis. So we're saying why we're going to do the dimer and how we're going to do it. What are the questions to answer? And then it gives you the dimer. You notice on this dimer, I've modified a little bit because it's going to say Tom and Sally, but now it's going to say how much insurance they need. Then either Tom accepts the recommended amount, I choose to purchase a lower amount, or I choose to purchase a higher amount, then he signs it. Sally accepts the recommended amount, chooses to purchase a lower amount or higher amount, and signs it. And there's two of these because you're going to keep one. We tried to think of everything, guys and gals. You're going to keep one. You're going to give one to them. So make them sign it too. You keep a copy in your file that showed what they agreed to do or didn't agree to do. Okay? And then there's a disclosure, two of them. You need to have them sign it, and then you give them one. You keep one in your file. You give them one to take home. Then it jumps over to the plan assets and debts. Simple. Assets minus debts equals net worth. Very, very simple thing to teach them. Assets minus debts equals net worth. Increase your assets, decrease your debts, your net worth automatically goes up. Then it's going to show analysis. So for them, we put in they had a TSA, they had a B of A loan, and their net worth is 190. There's a disclosure they need to sign before you give them a copy, and then you keep the other one for yourself. Nancy Versosa keeps texting me, so as soon as I get done, we got to make sure we bring her on because I think she's having a heart attack over there with it, Randy. So let's bring her on in a second. Income and expenses. Monthly income minus monthly debt payments and monthly expenses equal monthly resources available. Again, very simple. These are concepts. These are tools we're going to teach people because people are not telling them this. Think about it. This just helps an individual understand what to focus on with their finances, and we're going to show it to them in writing because people like to get proof. So you show current, and then if anything's modified, and it shows their income at the top, their expenses at the bottom, what their net monthly resources are available down at the bottom. $3,400, $3,900 because we saved them $500 some way, shape along the way. Okay, and again, then they're going to sign this disclosure, and you keep one and you give them one. Then the retirement success evaluator. Our focus of analysis is a little bigger because there's more information we got to explain to them, because I wanted to explain it to them for you so you don't have to think. So everything that I say to a client is right in here. About 3 or 4 pages of the summary. And right now the printing is a little off because we're not doing a PDF. We'll have it in PDF in about another month because it's going to be about a 200-hour programming thing. But it looks great now. I mean, they did a great job. Then it's going to have this. You'll print it out for them. Okay, awesome. That shows where their monthly flow is going to come from. Monthly income analysis shows that wonderful graph, right? Wonderful graph. Shows the retirement income analysis there. Monthly income from the asset, monthly income from the asset, monthly income from the pink asset. Again, you can't mess it up. It's perfectly set up for you. And then we have everything color-coded. So you notice the TSA here was blue. Well, guess what? John programmed this one, which just shows the TSA blue. The IRA distribution was beige. He programmed it beige. Stocks were red. CDs were the green. And then they signed the disclosure, and you hopefully have about 32 more clients. And you got to look at what this will allow you to do with recruiting, like Randy was talking, with referrals. Who wouldn't want to refer you to them if you could do this work for their friends and their family members? I'm just so excited and happy that we have this up. This is about as good as it gets, I think, as far as helping you just be unbelievably successful.